Kia ora, everyone. I've just come back from Budget 2025, where Nicola Willis has delivered her second budget. And it's clear to me that what she's proposing is the national government and the coalition government, are going for growth to try and get us out of our fiscal challenging position that the country finds itself in. I've been a tax partner and I've looked at budgets for over 25 years, and it's really joyful as a tax partner to arrive, and the first thing you see a budget at a glance is a new tax incentive called the investment boost. I think this is a significant move. It's an immediate deduction of 20% for businesses who buy new productive depreciable assets. That's machinery, equipment, plants, tools, technology, computers, anything you need to grow your business. Importantly, it also includes new commercial buildings. Yes, you can get 20% if you buy a new industrial or commercial building. It's not limited to building fit out, it is the whole building itself. It doesn't include land for obvious reasons, and it doesn't include residential dwellings. It's very much focused on that business end of the spectrum. In addition to the 20% upfront deduction, you will also be entitled to depreciation. And how it's going to work is that you'll get your 20% off at the start, and then you'll calculate your normal depreciation on at the prescribed rates on the remaining 80% of cost. Now, it applies to new assets, so it's encouraging new investment in your business. And so it won't apply to second-hand assets, but it will apply to a second-hand asset that you bring into New Zealand from overseas, because that's a new asset that will be being brought in to help grow the economy. I think it's significant also in terms of existing commercial buildings where there may be significant work done on improving that existing building, and those improvements were potentially black hole expenditure to many taxpayers because you didn't get a deduction because it was more than a repair, and your depreciation rate on buildings was often 0%. So I think at least getting 20% back up front is helpful in that perspective. I think what's important about this is that our BDO Business Wellbeing Index recently showed that business growth was a major concern for businesses in and around New Zealand. It's the first time that's shown up in our Wellbeing Index, and I think this is something that will try and encourage businesses to take the plunge, to make an investment, to get an extra deduction back as an extra incentive, and maybe just have a go and make an investment in that business and choose for growth. Also, there was encouraging things around foreign direct investment in the creation of a new agency, Invest New Zealand, which is going to aim and target multinational corporations and foreign investors looking to invest in sectors that have got high potential growth or are in the innovation and research space. And I, as a person who administers research and development tax incentive claims, I'm encouraged that more investment might go into that area, where we bring research and development work from overseas back to New Zealand. There was also some well-announced and forecasted changes, such as KiwiSaver, where there's been a reduction in the government contribution, a means testing. If you're over 180,000, you'll no longer get a government contribution. There was also some announcements around trying to make it easier for foreign investors to invest in infrastructure projects through maybe relaxing the thin capitalisation rules. So it's clear that it's a go for growth budget, and that it's starting off by trying to get businesses to pursue that growth. We've all got to play our part in pursuing this growth. The forecasts are challenging from Treasury. They're recognising the global uncertainty and the sort of weaker outlook and market volatility that's being created currently. And so forecasts of recovery are slowing compared to the forecasts announced last year. But so we've all got to play our part in balancing those books. And of course, that's up to businesses. but it's also up to Inland Revenue, who are also being well funded to go and collect more tax. That's my personal highlight reel from Budget 2025. There are more details on our website, and of course, your BDO advisor is always available for you to reach out with help with your business.